Welcome everyone, and good afternoon or good morning, depending on where you're joining from. Today we're going to talk about government contracting, timekeeping, and labor distribution, like I said, specifically for government contractors. Today we have with us Robert Jones with Left Brain Professionals. My name is Liz Brigson. I'm really happy to be here as your host today, and there's just a couple quick things that we'll point out as we get started. So first of all, if you've joined us before, hopefully you have, we like to make the webinars interactive, and Robert will take questions as we go. So you can use the GoToWebinar questions box to let us know what your questions are, your feedback as we go throughout the program. And if you'd like to say hello and let us know where you're joining from, as you know, we like to give you a warm welcome out there. Next, you can download the handouts for the presentation. Those are available right from the GoToWebinar control panel under the handouts dropdown. You can also get them from your Incoursa dashboard. Today's webinar is an hour and a half, so we'll have 7 polls you'll want to respond to at least, I think the number 6, it might be 5, but try to respond to all of them. We really do like your engagement and your responses for all of the poll questions. And if you have any questions about the webinar today, you can always email us at support@incoursa.com. Well, it's my pleasure to welcome back Robert Jones. Robert is a government contracts and accounting expert. His background is as a controller, a defense contracts manager, and Robert is an instructor, a speaker. He's really passionate about education. He's in the process of writing a book that will be available, I believe, the end of this year or early next year. And so we're just really thrilled to be partnered with Left Brain Professionals to bring some awesome education on the topic of government contracts. So Robert, with that, I'll turn things over to you, and thanks so much for being here today.
Yes, good morning, good afternoon. Thank you for joining us. This is episode 9 in a 12-part series that we're delivering this year on the Incoursa platform for government contract accounting. Don't worry, if this is your first webinar in the series, you'll be okay. Certainly there's a lot of great information in the previous 8. You can contact us or Liz to figure out how to get access to those. Some of those are available for study, self-study on demand, and we're converting the rest of those over as well. Today, we're going to be talking about timekeeping and labor distribution. For those of you that have been with us on all or some of the previous webinars, we certainly have talked or mentioned timekeeping and labor distribution as aspects of some of the other topics. And today we have an opportunity to take a deeper dive into each of these items. Just really quickly about us, the firm is Left Brain Professionals. We're a boutique accounting firm that works strictly with government contractors. We practice primarily accounting system design, implementation, and audit support. Some of the tasks or projects that we get involved with our clients include things like indirect rates, the SF 1408 survey, that's the pre-award accounting system survey. Do a lot of work with bids and proposals, FAR 31 compliance, unallowable costs, and what we're here to talk about today, timekeeping and labor distribution. If you contact us, or you already have, it's likely that you've met Melissa or Steve. You certainly have an opportunity to work with one of those individuals in the near future. We do have some learning objectives, and I always like to say that if I do my job and do it well, at the end of our 90 minutes together, you should be able to list the components of a timekeeping system, describe labor distribution, explain the effect of labor distribution on financial reporting and indirect rates, select an appropriate method for total time accounting, and be able to list some timekeeping solutions. I do like to kick off with an initial poll here just to kind of gauge where everybody is as we start today.
Wonderful. Well, as always, it's always nice to take a poll just to get the temperature of the room and ask, what is your level of knowledge on timekeeping and labor distribution? So helpful to find out the background of the audience and what direction you're coming at this topic from. So we'll just give about 5 or 10 more seconds for your responses to come in. So far, it looks like we have most of the audience is right there in the middle, Robert. So we'll wait until this ticks right over 90% responses. If anyone else wants to get their responses, go ahead and we'll close the poll down. and we'll take a look at those results. So just over half of you say you're fairly knowledgeable but could use a better understanding. That's a GoToWebinar field character limit that cuts off the rest of the response. A little over a third of you know some, but don't quite have processes or systems in place. Welcome to the 11% of you who this is a brand new topic for, and we just have a 1%er who's an expert. So thanks for taking the time to join us. I know you're all going to get a lot out of the presentation today.
All right, yes, thank you. And carrying on here, let's dive right into the meat of our topic. What are the components of a timekeeping system? For that, we look primarily to DCAA, the Defense Contract Audit Agency, their publication entitled Information for Contractors. You can download it from their website. We'll have it as a link in the follow-up email for you today. It is approximately 100 pages, and I like to say that it's information that every government contract accountant and the owners or executives in your company should know. And I will say it's not terribly boring reading. You can probably skip over a few introductory portions of it, but it really is very helpful information. It tells you what DCAA and other government auditors are looking for when they come in and perform some of the key audits, particularly that SF 1408 accounting system survey, right, where you're trying to get an adequate or an approved accounting system. In this guide is where you'll get some of the details of what it's going to take, and specifically the details about timekeeping and labor distribution. And one of the issues, or it's really the key issue when we start talking about labor is not supported by any external documentation. And you might say, well, we have timesheets. Okay, well, but those were generated by you and your employees, right? That's not an external document. You know, when we talk about external documents and anything with audits, when we look for a verification, right, we contact somebody else, right? In the case of AP or accounts payable, right, what do? If we want to, as auditors, right, if we want to validate the AP balance, we can contact the vendors and say, these are the open invoices that we show, and they'll say, yes, that we agree to that. Likewise with accounts receivable, right? If we want to validate that the amount of information that or I should say the amount of accounts receivable on the balance sheet that a client is reporting, right, what do? We contact some of those key clients and we say, hey, we show X amount of dollars. Is that what you show, right? In the case of labor, we don't have a way to do that. Yes, we could certainly pull up timesheets and validate it. We can certainly do some cross references to payroll to see that that's what was paid, and that certainly gives us a certain level of comfort. But otherwise, we don't know whether the employer and or the employee are lying on this, and we have no way to otherwise validate that. So we have some very specific timekeeping procedures that are outlined, again, in this document from DCAA. When we talk about procedures here, we did have a webinar on GovCon accounting policies and procedures. In there, I said that your timekeeping policy procedure, that's probably going to be the longest one you have, maybe outside of expense reporting. And usually timekeeping and expense reporting kind of go hand in hand, right? Because those are things that deal with employees, especially if they're out traveling, right? If we have employees who do a lot of travel with their work, timekeeping and expense reporting go hand in hand. But timekeeping is going to be probably one of your longest and more detailed procedures. And that's because there's some very specific requirements from DCAA. The first, and this should be no surprise, as accountants, we always like to have segregation of responsibilities, right? Segregation of duties. And here we're talking about segregation of responsibilities for labor-related activities. And let me back up for just a moment here and say, right, what would be some of those segregation of responsibilities? Well, one would be, right, who is filling out the timesheet versus who's approving it versus, you know, who's responsible for the budget, who's entering that time in the system, who's paying it out, right? We have different people, we have checks and balances in our process. Our procedures need to be evident, clear-cut, and reasonable, and that should apply regardless of the procedure, right? That's one of the things, again, I said before, is that, you know, as auditors, when we look at somebody's policies and procedures, whether it's timekeeping, something else in accounting, whether it's another compliance program altogether, right? We read the policy and procedure and say, is this written in such a way, right, that it's really going to achieve the desired intent? Does this satisfy the requirement? Does it meet the requirements of the laws or regulations that are involved? The maintenance of controls must be continually verified, right? We've got to make sure that the internal controls in place are properly designed and that they're working, and we have to test those on a regular basis. Individual employees must speak constantly, and again, most of the language that I have here is from that guide, although unobtrusively, made aware of controls that act as a deterrent, an effective deterrent against violations. And some of those notifications, whether it's a written timesheet, I think most everybody now is on electronic timesheets. Usually we have a little pop-up, or something that says, oftentimes when you first log in, right, it'll say, hey, this is, the company information, you got to be truthful and accurate, something like that. When people sign their timesheets, even electronically, right, whether they're clicking a submit button or whatever it is that they do, usually it pops up and, with something that says, by clicking submit, you agree that the information you're submitting is true, accurate, and complete, right, and that you haven't falsified documents. We need to have detailed instructions for timesheet preparation, and they should be established through a timekeeping manual or company procedure. First and foremost, the employee records his or her time daily. That is one of the things that often gets contractors in trouble, especially if they ever go through a floor check audit or a real-time labor check. That's one of the things we'll talk about a little later. But if you go through that, one of the things auditors are going to look for is, so they call upon the certain employees, right? They do a random sample. They bring some employees in and they say, bring your timesheet or a copy of your timesheet if it's an electronic one. And they're looking to see, okay, wait a minute, it's Wednesday afternoon. You should have time on your timesheet at least through Tuesday and arguably potentially through Wednesday morning, right? If it's already Wednesday afternoon and you worked on a couple of jobs this morning, that should already be recorded on your timesheet. The time actually has to be on the timesheet, right? So it can't be, hey, we jot it down over here on a napkin or something, right? And then on Friday, I take my napkin and fill it in. We know it happens, right? We have clients that, people have the good old-fashioned desk calendars, right, that fills the top of your desk. And they make little notes, right, on each day. And then when it gets to the end of the week or the end of the pay period and they got to fill in their timesheet, right, they go back and fill it out. I mean, it's nice that they have notes, but the time is supposed to be on the timesheet, not somewhere else. The time has to be entered and distributed by the appropriate project numbers or contract name or number, whatever identifier you're using in your system, right? As an employee, when I enter my time, I've got to select and say, I worked at this customer job or that customer job, or I did, I had some overhead time today because I had a staff meeting to go to or training that I had to do, whatever the case may be. And we have to, our policy needs to address how changes to the timesheet are handled. In particular, when we talk about changes to the timesheet, one of the things is that there needs to be a clear audit trail. And I always think back, and this still applies in the electronic world, but I think back to when I got my start in government contracting 17 years ago. We were still using paper timesheets at the time. And when there was a change, and I remember, so I was the accounting manager and I had somebody who reported to me. She handled all the timesheets and she had files. She had a folder for each week and a folder for the month and all this stuff, right? And when she would have a change, the employee had to put a single line through it. They had to write what the new thing was, whether it was a change in the number of hours, whether it was a change in job code, right? Maybe they had charged the wrong job or they put in the wrong hours, whatever the case may be. They had to put a single line through it so that I could see what the original entry was. They had to initial it, right, indicating that I'm the one who made this change and I'm authorizing this change. And then they had to write a note. Like we had a space on the bottom of the timesheet where they had to write a note to say, I'm correcting this timesheet because, right? And that's some of the things, those same basic elements have to apply whether you're using paper timesheets or whether you're doing something with an electronic system. We have to record all hours worked. We're going to take a deeper dive later in the presentation about total time accounting or uncompensated overtime. That's what we're talking about. And this is a concept that is fairly unique to the government, for government contractors. So for those of you out there who maybe are new to government contracting, or maybe you're checking out today's webinar to learn a different topic, you might be going, what is he talking about? You know, when we talk about recording all hours worked, this is usually not an issue, right, for our hourly employees, because they're going to tell you every minute that they worked, right? We know that, right? You've got an hourly employee and they work 10 minutes overtime, they're going to let you know they work 10 minutes overtime because they want their time and a half for that 10 minutes overtime, right? But we have salaried employees. They might work several hours over and we may never know it, right? If the time is not captured properly. And that's the key, is that everybody from the top down, regardless of whether they're salary or not, they have to record all hours worked. And then the employee has to certify the hours on the timesheet. I kind of mentioned that already, right? That one of the things is, and what you will see in an appropriate electronic system is that when somebody clicks submit or whatever the appropriate button is in your system, they get a pop-up, right? It pops up on the screen and it says, I verify, I validate, right, that the information, the hours that I've entered are true, correct, accurate, and complete, and that I have not falsified my timesheet, right? And that's one of the ways, again, that as auditors, we're making sure the employees have entered the appropriate information. Additional aspects of our timekeeping policy: the supervisor should approve and co-sign all timesheets. We used to take this when one of my previous employers, we took this to the next level. And we do see this in some larger organizations where not only does the employee sign the timesheet, but their supervisor, as well as the project manager, approves the timesheet, right? So it's multiple layers. And the reason for that last piece about the project managers approving it is, let's say you have some employees who work different jobs throughout the week, right? So they have a type of service that they do, right? They have a certain skill set. You've got multiple client projects or jobs open. You have employees who work, you know, some mixture of these jobs throughout the week. But all of those other jobs might be managed by multiple project managers, right? If you're a large organization, you might have a whole team of project managers, right, that are managing various projects and utilizing resources throughout the company. Well, as a supervisor, right, so when we take the first step of this, right, that the supervisor is approving it, hopefully as a supervisor, right, I know that my employee was here, right? So I can look at it, I look at the timesheet, it says that they worked 46 hours this week. I kind of look down through it and I say, yeah, they were here all days. I knew they were here late a couple of days. I remember they were doing some work on these other projects, right? I know that generally they did this work, right? So I sign it. When we take it to the next level for the project manager to sign it, then what we're doing is that project manager says, yes, that employee actually worked my specific job, and I know that because that's my job. I asked them to do the work. I verified they did the work. And now on the timesheet, I'm authorizing and saying, yes, they're charging 8 hours to my project, and I accept those charges because I know the work was done. So it does a couple of things there. That, again, further validates that the work was performed. It also validates that the charge code is correct. And it also lets me know then that when I create invoices at the end of the month, right, for my clients, that I know that the invoice is going to be correct because the project manager said, yes, that person did the work. That time now gets charged against my project. And so I have more accurate invoicing and costing for my jobs as well. Note that the employer is prohibited from completing an employee's timesheet. Certainly there are some exceptions to that, and we'll talk about it. We do have situations where an employee may be out on some type of TUI, a temporary duty assignment. They may be out of the country. Maybe maybe they're off on some kind of emergency medical leave or something that would otherwise prevent them from completing a timesheet, and we do have ways to handle that. Note that the nature of the work determines the proper distribution of time, not the availability of funding, the type of contract, or other factors. So I'm going to spend a minute talking about this and why this is important. Let's say as a government contractor, you have a mixture of contract types, not uncommon for many contractors. And so what I mean is maybe you have a combination of fixed price, T&M or time and material, and some cost type contracts. So obviously on a fixed price contract, right, I estimated the hours that were going to be involved. I rolled that up into my price, and I'm going to make money assuming that I hit my target on the estimate of hours, right? If I spend more hours doing that work on a fixed price contract, then what's happening, right? I'm eating into my profit margin that I proposed. However, on a T&M or a cost type contract, and certainly I do have some cost ceilings over there to deal with, but otherwise I'm going to be reimbursed for the hours that I say I work. So, what somebody might do, and obviously this would be a very bad thing, right? If somebody who's managing the projects and they're looking at time and they see that somebody worked overtime this week, or maybe somebody ran over the budget on a project, right? And you're looking and saying, hey, wow, we got this fixed price contract and we spent 10 hours more on it than we said we were going to spend. I'm going to go over here and tell Sally to take the 10 hours off of that contract, and we'll just charge that time to one of these other T&M or cost type contracts where I'll get reimbursed and it won't cut into my profit margin. Very bad. Never, never, never do that, okay? Right? Whatever the work that was performed, that's the work that's on the timesheet. That's how we record it. That's how we record the cost. That's how we invoice. We don't step back and say, where do I have money left on a project? That's where I'm going to have my employees charge time. That's an inappropriate approach. Number 4 here is that the accurate and complete preparation of the timesheet. Note is, and again, some of these probably sound repetitive, but this is very, very important. I think one of the questions I forgot to ask, and one of the things I forgot to mention as we got started, those of you that have been with me throughout this webinar series, one of the key things I keep saying is, right, labor is the #1 expense. I feel repetitive when I say it, but it's just really important, right? Labor is the #1 expense of almost every company. And so if the government is buying products, and especially if they're buying services from you, then what are they concerned about? They're concerned about the labor charges, right? They want to make sure that it's accurate, right? And they're paying only their fair portion. And so that's why these timekeeping and labor distribution policies and procedures that we talk about are so important. But the accurate and complete preparation of timesheet is whose responsibility? The employee's responsibility. They're the one who did the work. They know where they did the work, and it's their responsibility to fill that out appropriately. Earlier, I mentioned real-time labor evaluations or floor check audits. This is a special, unique kind of audit from DCAA. They used to be called floor check audits. In the last few years, they changed the name to real-time labor evaluations. It's the exact same thing. I think that maybe real-time labor evaluation sounds less threatening, but it's the same process. This is probably one, if not the only unannounced audit you would go through from DCAA. The only notification you'll have is when the receptionist calls you from the front desk to say that the DCAA auditors are here and they would like to speak to you now. Unfortunately, I have been through these before. I won't necessarily say that they are unpleasant, but certainly any kind of unannounced audit is not good. Now, for larger government contractors out there, these are fairly regular, and many of your very large government contractors actually have DCAA and DCMA auditors on site, people that pretty much live and work there on a daily basis because these companies are so big. Your small and medium companies, these can certainly still happen. So I will tell you that if you're an otherwise small company and you're going through a floor check audit, there's a very good chance, can't say that this is always true, right? So don't hold me to this. There's a very good chance that the reason you're going through a real-time labor evaluation or a floor check audit is because somebody has filed a complaint against you. And I know that to be true for, again, a couple of the situations that I was involved with. that somebody had filed a complaint against the company, where they had called the fraud hotline for the federal government. And so DCAA, DCMA get involved, and guess what? Somebody shows up unannounced and they say, we want to see what's going on here. So what's involved? First and foremost, right, are employees actually at work? Right, that's one of the things they're going to do. They'll actually make rounds at your facility. Of course, today, that's in today's environment with so many people working remote, poses a new set of challenges. But generally, right, they're looking to see, are employees actually at work? Are the employees performing in their assigned job classification? And it's kind of a separate thing that we'll also talk about a little bit later. Right? Labor categories are very, very important. If you have the wrong employees charging a labor category, that can be determined to be an unallowable cost on the contract, disallowed. And so now you end up in a situation where you've had employees perform work, you tried invoicing, but because the employee who performed the work against that labor category was not actually qualified to be in that labor category, now that cost is disallowed. And number three, that the employee time is charged to the appropriate job or indirect account. Let me tell you how floor check audits work. Again, I said they're unannounced. DCAA is going to show up at the door. All right, they're going to say, this is who I am. I'm here to, and usually they'll have somebody, right? They'll know somebody in accounting, or they'll be saying, we need to talk to the controller, whoever the appropriate person is. They're going to tell you what they're there for. They're going to ask for a list of your employees. They're going to do a random sample of that list. They're going to do interviews of those employees. They're going to request that when the employee comes into the interview room that they bring a copy of their timesheet with them. And they're going to ask a few key questions. Some of those questions are, one, they're going to look at the timesheet, and they're going to say, hey, it's Wednesday afternoon, and I want to see your timesheet. And if they look at the timesheet and Monday and Tuesday are blank, you've got a problem, right? Employees are not filling out their time on a daily basis. They're going to look to see, one, they're going to ask questions and say, tell me the type of work you did this week and the jobs that you worked. And then they're going to marry that up to what's on the timesheet. Is that what you recorded on your timesheet? Because part of, again, what they're looking for there is they don't want to hear the employee say, yeah, I worked on job number 23, but my supervisor said there wasn't any funding left on that, and he told me to change my timesheet to job 56 because we had money left over there, right? That would be a very, very bad thing to do and for an auditor to find out. They're going to, and that goes to the question that they're going to ask the employee, who tells you where to charge your time, right? And so the best way that this should work, again, I kind of go a little bit old school on some of these just so you kind of get the point. You know, imagine that you have a project kickoff meeting, which in and of itself isn't necessarily very old school, right? But you have a project kickoff meeting, you bring the appropriate resources into a room, virtually or physically. And then one of the things that we used to do was we used to have little pieces of paper that said the job code. We said, if you're the project manager and you've got 10 people in the room and you're assigning tasks, right, and talking about how the project is going to go and what the timelines are and where you're saving files or whatever, you hand a piece of paper to each person that says, when you work this job, this is the job code that you use, right? And so that's one of the things that the auditors are looking for, is who's telling you where to charge the time. And obviously it should be your supervisor or the appropriate project manager. With that, Liz, we have another polling question, please.
Okay, that sounds good. So for this next poll, we'll get that launched right now. This is poll number 2 out of 7. And to earn credit, you'll want to respond to at least 5, but we hope that you can respond to all of them. So the question is, all the following are included in timesheet preparation except which one listed below. And we have a comment here from Richard who says, as an auditor, thanks so much for emphasizing that time can't be shifted based on funding. So just another emphasis there. Thanks, Richard, for sharing that. And also, I want to mention that we have Jenny online from Left Brain Professionals who's helping us monitor the chat box and the questions. Jenny, are there any questions that you're seeing that we might be able to take quickly?
We do have one that came in a little while ago, and it says, do salaried managers need to record their time who are not working on projects?
And the answer is yes. And we'll take a little deeper dive later on into total time accounting or uncompensated overtime. But the reality is that everybody working in the organization needs to record all hours worked. And honestly, the simple reason for that answer is that you have a single approach. You have one policy that applies to everybody, and you just say that everybody records all time work. And then there's no, well, wait a minute, this person's, they work only in accounting, and we told them they didn't have to do it or whatever. One single policy, everybody records all hours worked, period.
That's really helpful to hear. Thanks, Jenny, for raising that question, and thanks, Amy, for asking it. Looks like we can go ahead and close down the poll response. So let's take a look at the answers. And Robert, if you can just point us in the right direction here. So the majority of the audience responded that all of the following are included in timesheet prep except verification that employees are actually at work.
And that is the correct answer. C, Charlie, is the correct answer there.
Great, so we'll go ahead and hide that. It seems like, I have a lot of questions as you're talking about this. I'm just going to ask one quick question. So it
Sure.
sounds like it's important for professionals and workers to record their time like as they go throughout the day. But is that like every hour? Like, what are the increments that are really expected practically?
So, great question. I'm going to answer it a couple of ways. The first way I would answer it is to say that you should record your time when you're done working on that project. And so when we think about somebody in an indirect function, like somebody in accounting or HR, right, they're probably doing accounting and HR all day long. So waiting until the end of the day to record their total hours worked for the day is probably an appropriate answer. For somebody who maybe is doing work again across multiple customer projects, if they're done and they know, okay, I just spent 2 hours and I'm going to go spend other time today on other projects and I'm not coming back to this one, I'm going to go ahead and enter my time. And arguably they should do that anyway, right? So that it's accurate, we capture it when it happens, and we're not at the end of the day going, okay, wait a minute. Did I work till 8:30 or 9 or was it 9:15 when I got done with that? All right, so that's the sooner you do it when you change tasks. And then I don't know if you meant the second part of what I'm going to answer here is, the increment of time is kind of up to you. You should definitely, we generally recommend quarter-hour increments. I'm not saying you have to record your time every quarter hour. I'm saying that, right? You should record the time in quarter-hour increments against your project.
Yeah, that's, I think, a great answer on both fronts. And it is nice to kind of have that consistency because hopefully we don't all have to go exactly to that 0.6 that law firms do. So thanks for taking those questions.
Yeah. All right, let's dive into our next learning objective, which was labor distribution. All right, so what is labor distribution? And when we talk, and there's obviously a reason why we put timekeeping and labor distribution together in the same webinar. There's a clear link that you'll walk away with here in just a moment. And again, I apologize, some of you that have been with me, you've heard some of this, but it bears repeating. We often, with new clients, will discover that they have some excellent timekeeping practices. Right, we go in, they've got good policies, procedures. They're using a really good tool. They're capturing all hours worked many times, so they're already doing that. They can pull reports and tell me exactly how many hours were worked on any given project, even direct or indirect, and that's wonderful. And then where it starts to break down is when we get to labor distribution. And labor distribution, and I'll make the connections here. Labor distribution is the conversion of hours into dollars and then distributing those dollars both across the GL among the various appropriate cost pools for direct, fringe, overhead, and G&A. And it's also spreading those dollars among all of the appropriate jobs, both direct and indirect. So going back to my example, I said that, we find many times that companies will have some very excellent timekeeping. But then when we look in the general ledger, we start looking at jobs, what we see is that we often find one general ledger account called, salary expense or labor expense, whatever they call it. So they don't have multiple labor accounts throughout the GL. And if those, again, who've been with me when we talked previously about having those cost pools for the fringe, overhead, and G&A, in order to properly calculate all of my indirect rates, I have to have labor dollars in each of those accounts. And so, for example, my labor dollars in fringe would be paid absences, right? That's money that we're paying employees, right? Whether it's PTO, holiday, jury duty, whatever that is, right? So that's a labor expense that goes into the pool of fringe. We obviously have overhead labor, right? And we have G&A labor. And so if you don't actually have the dollars in the GL in those GL accounts, then you cannot properly calculate the rates. And again, we'll talk a little bit more about that later. And then I have to be able to get good job costing. And that was one of the requirements for the SF 1408 survey, right? So in order to have an adequate or an approved accounting system, I have to have job costs. And job costs include what? They include labor. So that doesn't mean, print out something from your timekeeping system and tell me how many hours somebody worked. That means print me out something from your accounting system that show me the dollars of labor associated with that job. And that's why we have to take these hours and do that conversion. So when we talk about, and some of this I just mentioned, we talk about spreading it across the GL. You're going to need multiple GL accounts. Obviously, direct labor, pretty straightforward, right? We have employees who are working on client or customer projects, right? We need a direct labor GL account. We have, as I mentioned, paid absences, fringe, our PTO, holiday, however you break that out, sick vacation, whatever you call it, right? Those are W-2 wages, right, that we're paying to our employees, so we've got to account for those. Overhead labor, so things like training, supervisors, idle time. And by idle time, I don't necessarily mean people just sitting around twiddling their thumbs. It's things where, okay, we have a direct workforce, and one of the examples I love to use is the manufacturing environment, right? So obviously people who are on the manufacturing floor doing the work, right, that's direct labor. But there sometimes, right, one, they may have meetings, right? So we've got some training meetings for them. Maybe we got a weekly safety training, right? That's common in many companies, right? So we've got a weekly safety training meeting. Where does that time go? Well, it's not, that training meeting is not for any particular customer, right? So it's not direct labor, so that becomes an overhead expense. Another good example in that environment is we get to Friday afternoon, maybe we're waiting on some supplies to come in, or maybe it doesn't make sense to start a new project because we'll just barely get started, right? And then everybody's going to leave. It just makes more sense to start it on Monday morning. So we're going to take Friday afternoon. We're going to clean out the, the tool cage. We're going to, clean out the inventory room. We're going to clean out maybe we're going to reconfigure some stuff, get ready to start work next week. Again, that kind of work is not for any direct project. So that falls into that kind of idle time or other stuff that falls into overhead. So we've got to capture those dollars separately. And then G&A labor, typically things like accounting, HR, IT, those types of employees and functions. Taking the labor distribution across the GL, some of our tips, best practices that are involved here. One, use the title or use the word labor in the title or description. What we often find is that as we're working with clients to do various labor reconciliations, and note that the labor reconciliation is one of the key requirements of the incurred cost proposal. In December, that will be our 12th and final webinar in this series on government contract accounting. We'll take a deep dive into the incurred cost proposal. Schedule L in there is a reconciliation of labor. And one of the things that's very difficult, the reason that becomes difficult is that for companies who have multiple labor accounts, oftentimes they're not appropriately labeled. And so we're scouring the GL trying to find the correct account. Becomes more difficult when we have things like temporary labor and subcontractor labor and other stuff that's out there. So the terminology that you use in your titles and descriptions is very, very helpful. It's very key. And again, it goes to getting the dollars in the right buckets for the proper rate calculation. Fringe, the calculation of fringe is very important, right? Because it's out that those dollars are allocated over our employee or W-2 labor. And so we have to make sure that our accounts, that when we pull them in, do not include any temporary or subcontractor labor. To that extent, we have to have homogeneous accounts, meaning, right, there's only one type of cost in an account. And when we talk about labor, it's important to make sure that those accounts, one, only have labor in them, right, and that we're not combining any other travel or other types of expenses in there. The other is that we need to be very clear, again, that we have a distinction in our accounts between things like W-2 employee labor and temporary labor or something else. Because again, temporary subcontractor labor, that is specifically excluded from the calculation of fringe. It's excluded from our Schedule L reconciliation in the incurred cost proposal. And if you have an account where you combine all of those into one account, then it's nearly impossible to get the proper calculation, because trying to filter out the transactions and find the correct ones can be extremely difficult. The other trick, and we recommend doing this on a quarterly basis, very helpful, and it needs to tie at the end of the year. Again, when I'm talking about Schedule L for the incurred cost proposal, your GL labor accounts, those W-2 labor accounts, have to tie to what's reported on your W-3 and your 941. Basically, what the government is looking for is to say, okay, in the incurred cost proposal that you're using for your claimed rates for billing and expense purposes, you're saying you incurred this amount of money of labor expenses. And so they say, great, show us that you paid the appropriate taxes on the exact same amount of labor. Right? They want to make sure you're not doing something and saying, and for example, claiming more labor expense than what you actually pay taxes on. So that's why there's that reconciliation between the GL labor accounts and the 941. And that's why it's really important that these two previous items, tips on here, that you have the labor in the description, that you homogenous account, so it makes that reconciliation a whole lot easier. Again, my recommendation of doing it quarterly is that it's easier to find problems throughout the year than to wait until, March, April, May or something of next year when you're working on the incurred cost proposal and trying to find an error that maybe occurred in January or February of the previous year. We said the second part of labor distribution is that the labor dollars needed to be distributed among all jobs. And so total payroll dollars need to match the amounts charged across all jobs, both direct and indirect. Again, we'll take a little deeper dive on some of this when we talk about the uncompensated overtime or total time accounting in a few moments. But what the government wants to see is, this is what your payroll expense was for the period, and whatever that period is that they're looking at. They could be looking at a pay period, a month, a year, doesn't matter. Whatever the pay period is, they're going to say, okay, what did you claim were your payroll expenses? And then they're going to take the appropriate jobs and say, does it line up? And when you go through incurred cost audits and other proposal type audits at times, post-award award audits, one of the things that auditors are going to do is they're going to say, they're going to look at your financial statements and your indirect rate calculations, and they're going to say, okay, we want to see timesheets, we want to see job cost reports, we want to see invoices for those jobs, and we want to see the payroll records. And they're going to go across all of that because they're going to say, okay, your invoice says you charged me 122 hours of this labor category. So then they say, show me in your job cost reports that you incurred costs for that. And you go there and you say, okay, here's that. Here's my job cost report, and you can see I incurred 122 hours of this labor category. And they're going to say, great, now show me the timesheets, right? And within a labor category, that could be multiple employees. So let's say it was like 3 different employees. So you show the timesheets and you say, yep, you can see these 3 employees. You can see this job code. They charged a combined total of 122 hours. And you validate that and say, that's great. And then they take it to the next level and they say, great, now show me that you actually paid the employees for that work. So then you got to pull in the payroll records, and you pull in those three, you validate that that payment is there, and then you take the dollars from the payroll records, right, and flow back through and say, do these dollars that we validated the hours across, now do these dollars jive back into the mix as well, right? So if you said I paid a total of $15,000 as an example, right, with my labor cost for that, is that the labor cost that flowed back through to all of the appropriate jobs? Ultimately, what we're looking for here, I think you guys get this without saying it right, but you can't overcharge the government, or you cannot charge the government for more than what you paid, right? They want to make sure that whatever you paid in labor is what you're charging back to the job. And I mentioned, some tips on the previous slide. Go back and look at that when you download, and then we'll take this deeper dive into the total time accounting in the next section. One of our recommendations is that you use projects and jobs for all direct and indirect expenses for your timekeeping, expense reporting, et cetera. And so what do I mean by that? What oftentimes we run into when we work with new clients is that we'll see they have a job system of some sort for all the direct work, right? And it could be job, 1200, 1201, 1202, sometimes they have letters, and it doesn't matter, whatever your job system is, right? You've got some kind of system that you're using to capture time and stuff by project or by job, whatever your system calls it. And then what we'll find is, when you work, when you're on PTO or if you have a meeting, we have a completely different timekeeping method. It's very confusing to employees. It's prone to error. It makes reconciliation difficult. And one of the things that I always like to say when we talk about policy, when we talk about procedures and developing processes for employees to follow, I do everything I can to remove decision trees in processes. I try to make it as straightforward as possible, because the moment you build a process and it says, get here, do one of these 2 or 3 things, well, guess what? We give employees an opportunity to make a mistake. Not that they're intentionally going to make a mistake, right? If you build the processes and there's a bunch of decision trees, then we give employees an opportunity to make a mistake. If it's a confusing process, right, what happens? They just say, I don't know, just pick one. And I've seen that too many times in timekeeping systems where the timekeeping policy procedure, the way it was actually structured in the system, right, many times it's like a drop-down list. We've seen that where the way the project codes and stuff were organized, it was difficult to find and understand where you were supposed to charge. And what we discovered was that when you interviewed employees, you found out I just kept charging the same code because I couldn't figure out where the code was that I was supposed to charge, right? And that's something an auditor never wants to hear, right? Because that means now you've charged all of that time and all those dollars to the wrong place. Not to mention, it also messes up from a managerial accounting perspective. Right now, I've got wrong information that I'm making decisions on, but I may be charging my customers the wrong stuff because I have employees who are charging the time to the wrong place. And so if we take this back to this simple approach to the way we structure jobs and projects for both direct and indirect work, then we have a consistent method that we use and we make it simple and straightforward for our employees. As I said, same process for time and expense entry. And then it's also easier to run reports, right? We capture all the time in the same way. And then when I run reports, I can build all kinds of reports off of jobs, right? Because in many systems, for example, and even QuickBooks is one of these, if you only use projects, and that's what QuickBooks calls them, if you only use projects for some of the transactions, but not for all of the transactions, then you have to build multiple reports and multiple queries, right, in order to be able to extract information. But then you also, on top of that, you have to build some reconciliation to make sure, okay, how do I know that this plus this really equals the total up here and that something didn't get put into the wrong spot, right? So it just makes it a whole lot easier to have a simple process. With that, Liz, our next polling question, please.
All right, that sounds good. So let's go ahead with our third poll question. And the question is, in labor distribution across the G&L, you need G&L accounts for which of the following? So while we give the audience some time to respond here, Jenny, do you want to do a quick check-in and see if there's any additional questions that are a good fit for right now?
We do have one. This one says, is paid time off fringe expense included in reconciliation with W-3 and 941?
Yes, because again, that is labor that's paid out. So when we do the 941 reconciliation, at simplest level, so let's just say I even had only 4 accounts. I had a direct labor account, I had a fringe labor account for, paid holidays, PTO, whatever, an overhead labor account, and a G&A account. Those 4 accounts are all wages that I paid right on paychecks to my employees. That should add up. The total of those accounts should add up to what's on my W-3 and on my 941, right? Because that's where I'm reporting the taxes. So those two side by side, including paid absences.
Awesome, thank you. We're going to get ready to close the poll down. There are a couple other questions, it looks like, that have just come in that kind of fit with the topic where we're at. Jenny, you want to
Sure.
take any of those?
Sure. The next question says, if projects/jobs are not in use and total timekeeping is implemented, can existing labor be distributed accordingly, or does it need noted that total timekeeping was implemented as of the date?
So, when we do policy changes, what I would tell you there is it depends a little bit. Sometimes if it's early in the year or if it's otherwise relatively easy to go back and reclassify some journal entries and some transactions, we will sometimes go back and make those adjustments. Obviously, when you're working in QuickBooks, those kinds of adjustments are easy to make. When you're in other systems where, once you close the period, things are locked down, it's a little more difficult. Obviously, later in the year, the more transactions you have, the more employees that are involved, right? Then sometimes you just say, no, we're implementing a new policy. Even in this case, let's say we're going to implement a new policy October 1st. This is the way it was handled prior, up through September 30th. This is the way it was handled October 1st forward. You should make that notation regardless. Whether you go back and do any kind of reclassification is a separate conversation. I would also note here that when we get to the incurred cost proposal webinar in a couple of more months, that on Schedule M is where you have to record any kind of changes in accounting policy practices, and that would be one of the things that you would list on Schedule M.
Good. We did close the poll down. The correct answer is all of the above, and we have it looks like we have one more question, Jenny, on this topic.
Yes, the next question is, can you charge an overhead rate to the government to cover other employee costs?
I'm not completely sure about the question here. I'm going to say the answer is generally yes, right? To your overhead, just a quick here, overhead is usually allocated over direct labor. Overhead includes other expenses like facilities, maybe some training. It includes idle time. It could be supervisors that are in there, right? Supervisors that are managing a group of people, not necessarily any specific project. Their time goes into overhead. So when you calculate your budget, right, and you say these are expenses that are going in here to calculate those rates, those other employee type of expenses would be in your overhead. If that doesn't seem like the answer you're looking for, if you just contact us directly, be happy to do a deeper dive and help you with that.
Awesome. Well, thanks, Jenny, and thanks so much for taking the time to pause to answer those questions. All right, let's go ahead and close the poll down. And Amy actually, who asked that question, she said that was what she was looking for. So she says, thank you, Robert. All right, back to you.
All right, so now let's dive into this total time accounting that I mentioned. And I said that this is a somewhat unique concept to the government. Again, many companies are very good, even in the commercial space, about collecting, I would say, all hours worked, at least as they relate to direct contracts, right? Because especially if you're selling a service, but even if you're selling a product, right, you want to know how much time it's taking to do that work, right? Because that's what you're billing for. Where we see that companies fall short of that is that they're not consistent with it. and that they're not, and so for example, they may be very good about collecting all direct work, but they may not be collecting total time for indirect work and for employees who cross over that do both direct and indirect work. There are some details that you can find in DCAA's audit manual, chapter 6. I've copied some relevant information here. Basically what they're saying is that uncompensated overtime presents a risk for inequitable allocation of direct costs. And I'm going to give you some examples of this. Presents a risk for inequitable allocation of direct costs for certain contract types that should be in compliance with FAR 31 determining allocability. Additionally, if an employee works uncompensated overtime, right, and what do we mean by uncompensated overtime, and what are we talking about here? And we're talking about salaried employees, right, who work additional hours, so uncompensated overtime. If they work uncompensated overtime hours directly on a contract and do not allocate for those hours as direct hours, an inequitable allocation of labor costs could result in non-compliance with CAS. Right, so if you have CAS-covered contracts, and that was one of our previous webinars, I think that was back in May, I think it was number 5 in the series, right? So if you've got CAS-covered contracts, and keep in mind when we talk about CAS, even if you don't have CAS-covered contracts, there are some CAS requirements that may apply to you if the amounts are significant or material in nature. But the important point here is that if you're not capturing total time accounting, the direct costs that you're allocating to a contract as well as the indirect costs can be out of whack. There are some very, so we'll give you the CAS that we were referring to here. CAS 403 deals with the allocation of home office expenses to segments. CAS 410 deals with the allocation of a business unit's G&A to the final cost objectives. And CAS 418 deals with the allocation of direct and indirect costs. So there are acceptable methods. And we're going to walk through these, and I think when you see some examples here, you'll begin to understand why we're talking about this. And let me pause and insert here that honestly, even outside of the requirement for government contracts, you as a business manager, as a business owner, as an accountant out there who's providing analytical, strategic information to your business managers and your business owners, you should be concerned about this. Why? Right? You want to know all hours that somebody is working for a couple of reasons. If people are not recording all hours worked, then you don't know the true cost in terms of time to perform a task or to complete a project. It can be you may not be charging the right price. You may not be billing your clients enough. You may be in a situation where then when you go to do follow-on assessments, right? So let's say you build a project or you perform a specific task. Somebody comes later, potentially the same client, maybe a new client, and says, I want the same thing. And you say, oh, well, I've got to figure out how much it costs. Let's go back and look at the records, right? If you're not capturing all of the time appropriately, then you may not know all of the hours that are actually involved. And what we've seen many times as well is that for salaried employees, what happens? They get in the habit of just putting 8 Monday through Friday. And if they're actually working 10, 11, 12 hours, and we've even heard somebody say, well, I worked the same project all week, even if it was a direct project, and it's a fixed price contract, we're not going to get any more hours. We're not going to get any more money from our client because, we're putting more hours in it. We're still only making the same amount of money. And if it's a salaried employee, arguably it's not costing me anymore, right? So if you step back and look at it from that perspective, you might say, well, Robert, why are you making this argument? The employee doesn't cost me any more money to work because they're salaried. I'm not getting any more money from my client because it's a fixed price contract. So this margin remains the same. Why do I care? Well, you should care because, again, for follow-on work, when you go to price set in the future, you want to be able to go back and look to see, hey, to perform that task, we were constantly bidding that at 100 hours for the task. And when I go back and run reports, I'm seeing that on average, it's taking us 120 hours to do that task, right? So now in the future, you should be pricing that at 120 hours, not at 100 hours. So there are implications from a managerial perspective, from a pricing perspective, that you should be concerned about, even if you're not dealing with government contracts. Back to the acceptable methods here. The first is what we refer to as the adjusted or the effective hourly rate. This is the DCAA preferred method. I will say that when you select an accounting system or a timekeeping and labor distribution system that was specifically designed for government contractors, when they deal with uncompensated overtime, they're usually programmed to take this approach. And so what this means is I take the same salary cost, right, because it is their salary, that doesn't change. I figure out what their new effective hourly rate is based upon the hours that they work, and that is the cost per hour that I charge for that period to all the work that I did in that period. So what's my example look like? Let's say I have a salaried employee who earns $1,600 a week, right, for an assumed 40 hours of work, right? That's how we build out salaries. That's $40 an hour that employee works. But let's say this same employee happens to work 50 hours this week. Well, now their new effective hourly rate is $32 an hour, not $40 an hour. So when I go back to my labor distribution, right, where I take my timesheet, I take hours, I convert them to dollars, right? Remember, that's what we said labor distribution was. Before, if somebody worked 40 hours, I would have taken the number of hours by project, multiplied it by $40 and applied it across, and that's what I would have posted in the GL. That's what I would have posted to the jobs. This week, that same employee worked 50 hours, which gives me a new effective hourly rate for this week of $32. So now when I look at the time, I have to take the time multiplied by $32, not by 40 hours, right? So that's going to have an effect on how these dollars flow through to the GL and to the job ledger. Other acceptable methods. We can allocate time based on a percentage. So, I can have employees capture their time, and when I actually record the time in the system and do the hour. So one of the things that we've heard people say in the past is our system doesn't understand how to take additional hours and calculate this, right? We can't figure out how to do it. We can't force any kind of programming in there. So we don't know what to do. Well, you could take a percentage approach, right? So what you do is employee keeps their time, and let's say they work 12 hours today instead of 8. They take, the hours by project divided by 12, get a percentage, multiply that 8, and now that's what you put on. Not the best approach. You would certainly, if that is the approach you take, you would want to keep documentation to show that they actually worked 12 hours, that you converted it to a percentage and flowed it through. You would get the same effect from a dollar perspective on the back end. Obviously, again, auditors would want, if somebody comes in to audit this, they're going to want to see, well, how did you get to that? So you're going to need some backup information. And it's going to require additional work for both you and the employee, right? And so as we start, I take the approach with any kind of process. I try to simplify it, streamline it, shorten it, right? Make it as easy and efficient as possible. And when we take things and start saying, well, we're going to add this calculation back into the process, you're lengthening the process, you're potentially making it difficult for the employee, and you're opening yourself up to errors in performing the work. So we're going to distribute the salary using a prorated allocation. And so what I did here is you see that my employee from the previous slide worked 50 hours across 2 different projects, 20 hours on project number 1, 30 hours on project number 2. Turned out to be 40 and 60%, right? And so if I were going to enter this on the timesheet, well, and I guess I could have a couple of approaches. I can either alter the time on the timesheet and say, instead of entering 50 hours, I'm going to enter 40. But instead of entering 20 and 30, I'm going to enter 16 and 24, right? That would be my 40% and my 60%. Or potentially, again, depending on your system and how you're doing this, maybe the employee enters the 50 hours on the timesheet and that's what you record, and you calculate this percentage outside of the system when doing your labor distribution. I'm not trying to confuse you, but you can see where this again adds another layer of complexity. Capture the time actually as recorded, export that out, but before doing the labor distribution, I have to do this percentage calculation, multiply that through, and then carry that through my calculations. That would probably happen in some kind of intermediate file, potentially in Excel or whatever you're using to transfer time into your accounting system. With that, a quick polling question for us, please, Liz.
Okay, that sounds good. So let's go ahead and launch into poll number 4. Uncompensated overtime presents a risk for inequitable allocation of what kind of labor costs? This raises an interesting question.
Yeah, it's actually a bit of a tricky question. There is a best answer here because it's the way that the information is actually worded from the DCAA audit manual that I mentioned. This is a tricky question.
All right, well, it looks like we have about 80% of the responses that have come in. So let's go ahead and just give us about 5 more seconds. We'll close the poll down and you can let us know how everyone did. So let's go ahead and close that. We'll share the results.
And so it looks like a little over half got it correct. So again, if you go back and look at the slide, if you look at what DCAA says, their concern is for the inequitable allocation of direct labor costs. Arguably, and I think I mentioned that, if our direct costs are wrong, potentially we run into situations where our indirect costs can also be wrong. But the focus here really is about getting the correct allocation of direct labor costs into our project. All right, carrying on, I said that we had 3 methods for the acceptable allocation of uncompensated overtime. The third is a variance method. This is where you take a standard cost approach. You would charge that standard cost to your direct costs, right, for every hour worked. Then you have to do a reconciliation, right? So when we talk about standard costs, and we're back to this absorption and variances, right? So in order, one, to develop a standard cost, what do we need? We need really good estimates. So, if this is a situation where employees regularly work overtime and I should say uncompensated overtime, right? That's what we're talking about here. If you have a situation where you have salaried employees who regularly work uncompensated overtime, and you have good estimates of that, right, and they don't vary much, this approach might work. I'm not a fan of variances. I'm not a fan of variance accounting. I don't like it. I'm not a fan of standard costing. I get it. We have clients who deal with it. We're actually working through a client issue on some standard costing now. And unfortunately for that particular situation that they're doing, it's about the best that they can do for one of the things they're working on. But why do I not like it, right? Because it's variances. There are things in that we have to go in and resolve. We have to track those variances. We have to reconcile those on a regular basis. And so what does that mean? It means more work, right? And what am I trying to do with my policies, my procedures in general? What am I trying to do? I'm trying to lean out the process, make it simple, clean, straightforward. That's why that first approach of just recalculate an effective hourly rate for this period post it go on. I don't have to calculate percentages. I don't have to deal with variances, and I don't have to reconcile those variances at the end of the period. And that will be one of the key things that auditors, if you take the variance approach, I can tell you without a doubt, then their next question is going to be, how often do you reconcile the variances? How often do you update those standard costs? And actually, how do you fix and adjust to those variances, right? So again, for standard costing and variances, we have the variance because we've either under-absorbed or over-absorbed, right, that other cost pool that we were trying to allocate out. And so if you under-absorb or over-absorb, what do you do? Where do you fix those dollars? Example here is you have a salaried employee that earns $83,200 a year. They're expected to work 2,300 hours a year. Notice not 2,080, right? 2,080 is our normal 40 hours a week. But we know on average this employee is expected to work 2,300 hours. Their new cost for the year, and if you go back and do the math, you'll see my 83,200 was that $40 an hour employee. Their new cost per hour for my standard approach is $36.17. And then any variances from that are charged into overhead. There's always going to be variances, and it's okay, right? I mean, they are, and they happen. We charge those into overhead. But again, if those variances get very high, that's going to be a flag to the auditors, and they're going to start asking you questions. Note here, I think I said some of this for the variance method. It requires a really good estimate of hours worked. And I just said that the large variances would be questioned and they need to be reconciled. It adds that other layer of complexity as well, not only to my month-end close and dealing with the variances, but it adds another layer of complexity to annual budgets, right? So normally if I'm building budgets, right, I look at my number of employees, I've got names, I've got labor categories. We build budgets on the assumption that people work total, right, including their paid time off, 2,080 hours. That's the standard approach. Now, if I say I'm going to take this variance approach, then I have to, by employee, know what those variances for additional overtime are, right? So I have to start running timesheet reports from last year, or arguably even from last few years. I'd have to find averages. I'd have to apply those by employee. It just makes the process that much more difficult. Another polling question for us, please, Liz.
All right, we're going to have a few that are going to come a little bit more closely together as we get toward the end of the presentation here. So the fifth poll is the DCAA's preferred total time accounting method is which of the following? Looks like the answers are coming in pretty quickly.
And I said this a couple of times, so hopefully everybody gets this one correct.
We definitely have a clear leader. All right, just about 5 more seconds here and we'll close the poll. Okay, so we're going to close the poll and we'll share those results.
And the answer is A, the adjusted effective hourly rate. Again, that's the CCA's preferred method. I mentioned that's probably the easiest and involves the fewest steps. So
Great.
A, alpha is the correct answer.
Jenny, do we have time to take a quick question?
Sure. We actually just had a question come in and it says, do you have a list of timekeeping software that calculates the adjusted effective hourly rate? Ours currently does not.
Actually, if you will hold that question for a few more slides, I'm going to talk about that at the end of today's presentation.
That sounds great.
All right, back here. So one of our other learning objectives today was financial reporting and indirect rates. Some of this I've kind of already mentioned, but the distribution of labor dollars across the GL will look different for your tax CPA, right? And that's, and I will tell you that when we work with new clients, one of the things we always do is get their tax CPA involved in the conversation for a couple of reasons. One, we don't do tax, and I want them to make sure that they realize that we're not trying to steal their client. We're providing a very specialized service. So many tax CPAs at that point take a huge sigh of relief, realizing, okay, I'm not losing a client. They oftentimes have a second sigh of relief when they say, man, I'm so glad they hired you. They've been asking me these questions about these government contracts, and I just don't know the answers, so that's nice. And then the other thing that's really helpful for them, and again, I think every time we've had this conversation, we say, hey, as we get in here and work with the client, we're going to be making changes to the chart of accounts. You're going to see some new structures, some new account numbers. We're going to do things like take these labor, instead of having a single, salary expense, you're going to see these multiple labor accounts. And, but it's all going to add up to be what it was before. and you should go, that's great, I don't really care, just give me a crosswalk, right, so I can match it up to last year, right? Because that's what you just don't want to send a new trial balance to your tax CPA at the end of the year, and then go, what the heck is this mess, right? This doesn't look anything like last year. But if you at least give them a heads up, one, that you're making the changes, and two, that you provide a crosswalk, right? Here's what the old account was, here's what the new account or new accounts, and if it's multiple are, then it's easy for them to follow what's happening. I mentioned this already, but the distribution of labor dollars across the GL allows for those accurate calculation of indirect rates. We've got to have labor dollars in fringe, overhead, and G&A in order to properly calculate those rates. Let's talk a little bit about how labor distribution can affect financial reporting as well in your indirect rates. The terms that I'm going to use here are a little broader when I say direct expenses in general, which would include direct labor. But again, labor being the number one expense of most companies, right? When we talk about direct expenses, usually direct labor is by far the leader. If you have an increase in direct expenses, right, such as an increase in direct labor, you will have a decrease, or it reduces your indirect rate, right? Because now the pool, whether it's my fringe pool, my overhead pool, my G&A pool, is now spread over a larger direct base. So what's going to happen? If direct costs go up, then my indirect rates come down, generally speaking. Number two, then the reverse is true, right? So we have an inverse relationship in our rates here. If I have a decrease in direct work, right, a decrease in direct labor, then what's going to happen? My pool is now spread over a smaller base, so a decrease in direct expenses means that my indirect rates are going to go up. And if we have a shift of dollars between direct and indirect, it can actually have an exponential impact. And this is something that many government contractors have seen and continue to see during the COVID crisis, right? So we have a situation where we have employees. We want to keep those employees because we need the skill set. We need that knowledge. We don't want to lay them off, because if we lay them off, right, what happens? They go find another job. And then when we're able to do the work again, guess what? We don't have people to do the work, right? So what do many government contractors do during times like this? They do something to try to keep people employed. And what does that often mean? It often means putting them on overhead, right? We give them other projects. We might do some R&D. We might do some other things internally, right, to working on the business, or some other things behind the scenes. We shift those dollars to overhead. So now what happens? We actually end up with an exponential effect, right? So we have a situation where I take dollars from the direct pool and I move them to an indirect pool. So now my indirect pool is larger than it was before, and my indirect base is smaller than it was before. So I now have an exponential impact on shifting those dollars. I think this is our last polling question, Liz.
All right, so my count goes up to 6, so we might have one last one right at the very end. And for this poll question, which of the following is a true statement? So this one seems requires a little bit of thought here to think about the direct versus indirect relationships between some of these different types of expenses.
Yeah, and I just remember there's an inverse relationship. So just remember that.
And it does look like everyone's doing quite well so far. So let's leave this open for about 5 to 10 more seconds here. All right, we'll get ready to shut that down. Okay, we'll close. We'll take a look at the answer.
And it looks like two-thirds, I should say, got it correct, right? It's the decrease in direct expenses, right? If my direct expenses go down, I have a smaller base, and what happens with my indirect rates? My indirect rates go up. So B, bravo, is the correct answer. All right, we've got a few more slides, and I think you are correct. I lost count of the polling question. We've got a few more slides, another polling question, and we should have time for some more Q&A at the end. So get those questions in there. You guys have asked a lot of great questions already today. Let's talk about timekeeping tools. The first that I talk about are payroll platforms, right? So it doesn't matter whether you're using ADP, Paychex, Paylocity, Gusto. I don't know, there's so many out there. I can't keep a track of all of them. When it comes to timekeeping, and remember here I'm talking about the timekeeping tools that they have. They're often rudimentary. They lack advanced functionality and reporting. That's our general assessment. I know that some of the platforms have made improvements, but when we talk specifically about government contracts, there are a few key things that they get wrong. And keep in mind here, and you might say, well, how could they get it wrong? Well, for a couple of reasons. One, keep in mind these are payroll companies. Almost all of them started as what? Payroll companies, right? They didn't start as a timekeeping company. So they developed timekeeping later, or they bought a solution from somebody else. And unfortunately, what we've seen again with some of the platforms is that they kind of hammered and pounded those timekeeping tools into their platform, and it just never really worked out correctly. But specifically, when we talk about, let me say the other thing. For many commercial companies, they don't need extensive timekeeping. Even if they want timekeeping by job, they get that at a high level. They don't need intricate reporting. They don't need labor distribution. They don't need the audits and the other stuff that we're going to talk about. We've already talked about that are a requirement, right? So what we've come across, again, most payroll platforms, the inability to calculate or provide labor distribution reports. Many of them will have what they call a labor distribution report, but it does not convert hours to dollars. I'll be honest with you, I've never seen one yet that does it correctly, especially when we talk about uncompensated overtime, okay? And many of them lack the ability that even if you can get some kind of conversion of hours to dollars, the ability to associate those with multiple GL accounts and jobs, again, it just, when we go back to that basic, what did I say is labor distribution? It's converting hours to dollars and then distributing those dollars both across the GL and among all the jobs. And we find that those tools just don't exist. They oftentimes lack what I will say is an adequate integration with your GL software. Yes, many of them do provide some level of GL integration. But again, when we go back to this concept of having multiple GL accounts and jobs, and being able to convert the dollars and post them to the multiple GL accounts and the multiple jobs. Even if there is an integration, usually it's very rudimentary. They want to make one journal entry to a salary expense, right, and then do the appropriate journal entries for your taxes and such, and that's usually about it. They're unable to deal with those other requirements. And also note, I think I said some of this earlier, but just as a reminder, right, you need hours and dollars to generate client, right? So you need the hours to generate client invoices, and you need the dollars to generate the job cost report. This is a big area where many of them fail. They lack sufficient audit trail and the notes to track changes. And you might say, well, many of these are online. They've got all kinds of date and time stamp stuff when people log in and do stuff. Yep. But many of them lack the ability to actually lock a timesheet, right? So that when it's done, it really is locked. And I have the ability to track the changes and force that note, right? Remember what I said is when an employee makes the change, I need to see what the original entry was, what the corrected entry was, and they need to be required to enter a note saying why they made the change. And we see that they lack the ability to enforce some of those requirements. So we found, I remember we were working with a client a couple of years ago, the payroll platform, and honestly, I forget which one it was. They had a note functionality, but they could not make the note a requirement. So again, if the note is not there, then guess what? You're going to have a problem during an audit. And then the other thing that becomes problematic is the inability to track and report on labor by both individual employees and by labor categories, right? Remember, one of my examples earlier today was that we oftentimes have multiple employees that make up a single labor category. And so we often need reports not only at the individual level, but also at the labor category level. It gets more confusing when we have labor categories that vary by contract. So what are your options? There are a number of timekeeping systems. These are not all of them by any means, but there are a number of timekeeping and accounting software out there that were designed for government contractors. They're designed for this job costing, the timekeeping, labor distribution functionality. T-Sheets is an excellent one. We use it internally and with many of our clients. Great tool, integrates well with QBO, a lot of good reports. I will say that it doesn't do the labor distribution as well as I would like, but we have built our own Excel template that the output that they provide is easy, cut and paste into our template, and then our template generates the journal entry that we need to do the proper labor distribution. Harvest, very similar. Again, the other thing I always have to caution when we talk about software and DCAA compliance, remember that DCAA does not approve any particular software, and even some of these softwares that say they can be DCAA compliant, they have to be configured as such. T-Sheets, for example, out of the box is not compliant. There's some things you have to do, relatively easy, but there's some things you have to do in order to get to that compliant state. Big Time is another one, Hour Timesheet, Spring Ahead. There's some other software out there at the core level for general ledger accounting, things like Uninet, Procast, Impact that have built-in timesheet and labor distribution functionality. I mentioned this timekeeping by labor category. You need to be able to record, your system needs to be able to record the time by labor category, right? Because we often have to report that. So as an employee, when I enter my time, I have to select, obviously, I'm logging in as me. I select the job that I'm working, and I either select my labor category for that job, or the system automatically assigns it because it's been set up appropriately. Behind the scenes, again, you need to make sure, and we could probably almost have a whole other webinar on labor categories and billing. You can really get into trouble with that. So just make sure that your employees are assigned to the appropriate labor category, that they meet the requirements, and that you have the ability to generate reports. That is part of those reports are a requirement for Schedule K in the incurred cost proposal. And again, we'll talk about that during our December webinar. This process becomes more complicated by the fact that you may have multiple people in a single labor category that I'll mention, and a single individual may qualify for different labor categories across all of your contracts. This is where it gets super confusing. This is, again, one of those areas where we find that the payroll platforms for timekeeping fall short, because usually you can only assign a single labor category to an employee. Trying to assign a different labor category by contract for employees is a special process, and you don't find that many places. You see in the example here, and you might say, well, why would a single employee have multiple labor categories? The primary reason for that is what qualifies as a software, in my example here, what qualifies as a software engineer 1 versus an engineer 2 versus an engineer 3 may vary by contract, right? So whether it's the education, experience, certification requirements of that labor category, they vary by contract. And so somebody may qualify as a software engineer 1 on one contract, but as a software engineer 2 on another contract. This is a complex process. Liz, I'll go ahead and let you kick off the polling question here. This is a complex process. We've covered a lot of information. Now down to this last polling question, we'd really just like to know, how do you feel about this now, right? Some of you said early on, I got this, I know what I'm doing, right? Do you still feel that way? Do you feel like, hey, I've got this, or that I've got some questions and I need some help? And I guess with that, Liz, we can also get ready for, I know we're kind of down to the wire, but we've got some Q&A questions left.
Yeah, let's go ahead while everyone else is finishing the poll responses. Jenny, do we have time for about one question?
Yes, we do have a question that came in. It says, we use T-Sheets with QuickBooks Elite Payroll Service, and I haven't figured out a way to integrate them so that the data flows across into the financial dollars. So I currently have to do an offline percentage allocation and reverse and rebook the payroll in QuickBooks to the correct codes. Is there a way to use this system to do the adjusted effective hourly rate and have it actually record in QuickBooks correctly? And can we get get the templates you spoke of?
So one of you, if you contact us, and I'm going to put the contact info on the screen here in just a second when the polling question goes away. You contact us at support@leftbrainpro.com. Again, support@leftbrainpro.com. We can help you with all of that. I think the short answer to your question is, and if you're using Intuit's payroll, any of their platforms, I can tell you it does not do this. Which is why we have to do a journal entry and basically do what you said. You've got to reverse out, right? So most of the payroll, they give you one lump sum, right? Here was your total payroll expense. They put it in one GL account. You now have to do something to calculate what that is and do a manual journal entry to reverse it out of there, distribute it to the other GL account, and distribute it to the jobs appropriately.
Wonderful. Well, that brings us right to time. It sounds like a great question for follow-up. There's a lot that goes into that. And Robert, I know your team is very well equipped to help go into those details. So thank you very much for an excellent presentation. We had some great questions from the audience. Thanks, Jenny, for helping to facilitate those questions. Robert will be back. First, before we talk about next month, Robert, why don't you just give us a quick rundown on how everyone can connect with you in Left Brain Professionals?
Yeah, again, contact information is on the screen here. You can go to our website to download the presentation, see what else we have going on. I will tell you, we have a new website, so if you haven't been out there recently, check us out. We've updated, added a lot of information. You can find us on all the social media platforms. So Jenny, in addition to helping me on the webinars, does all the marketing behind the scenes and keeps us very active and visible. LinkedIn, Twitter, Facebook. We have several videos on a YouTube channel, and you can find us on Instagram. Again, if you've got questions, whether it's about this today or another question comes up later, you can always email us, support@leftbrainpro.com. And we do have some, again, I think we've got 3 more already on the books for this year with the Incorsa platform, and we're already working on our 2021 calendar.
Yes, we're definitely excited about that. You were the very first to pick topics and dates for the whole next year. So I just am so in admiration of how far ahead you plan and just how strategic you are, Robert, in putting together awesome content to make sure you can bring the best education. So we really, really appreciate that. Just our last few closing items, specifically next month, Robert will be back on October 13th. Robert will be talking about strategic pricing for government contractors. And I know pricing in this current economy and environment is so important. So you'll get a link to register for that in the follow-up email that will go out in an hour. As Robert mentioned, the 3 courses that we started the year with are available in self-study format. So if you'd like to go back and review those courses and earn CPE credit, you can do that. Those are actually clickable links that you can get to from the handouts. And if you use code LBP15, you can get 15% off those self-study courses. So when you close the GoToWebinar control panel, there'll be a course survey that pops up. We'd love your feedback, and then you can log into your Incorsa user account. You can get your CPE certificate in an hour. The course materials are already uploaded, and then later on this evening, we'll have the recording uploaded for your future reference. So thanks for joining us. Thank you, Robert, again, and thank you, Jenny. Hope you guys have a wonderful rest of the day, and we'll talk to you all soon.